Did Jay Powell just give us a rug pull and put a top in the market? We come over and look at the fear and greed index. Earlier today, we were sitting about 58, 59. We are back at 56. Jay Powell was not able to move the needle all the way over into extreme greed. When we look at this article right here, stock market today, Dow falls over 100 points as stocks in volatile session lower after Fed's biggest rate cut in 16 years. Now, we got to ask ourselves the question, why, oh, why is Jay Powell cutting rates by 50 basis points? Is it politically motivated, or is it true that we are in a recession, or it is very, very close? We come over and look at some of the stocks out here today. Let's see how they perform. We take a look at Apple real quick. Apple was actually able to come up, closing the gap, which we were talking about today on the live stream. And if you guys missed out, we had an amazing call on the Nasdaq. And that call was before they came out at 2 p.m. with a rate call. We were looking for the Nasdaq to come up to 19,871. You can see we overshot it a little bit. Boom, we came right back down. If you look at the range today, we had a 340 point range. When you look at the S&P 500, we had an 80.5 point range, closed near the lower end of the session. And normally, if we're going to be in a bullish market, we don't want to see stocks closing at the lower end of the range. All right, let's come over and take a look at how the indices fared across the board. The Dow was down 103 points. The Nasdaq was down 54.78 points. The S&P 500 down 16.32 points, with the Russell 2000 being able to eke out a small gain, 0.04 points. We look at advancing issues versus declining. We had 58.3% of issues declining on the day. Then as we come over and look at the sectors across the board, every single sector was down except for communication services. So it was a wash across the board. Now the question is, do we get a continuation going lower tomorrow? Now, I also want to remind you guys, every time the Fed has went on an aggressive rate cutting campaign, like we started out there today, the market has had substantial declines. 36%, 48%, minus 27%, minus 51, minus 58, and minus 35%. Now the question mark is, how low are we going to go this time around? And you might say, Mike, one rate cut does not make it an aggressive rate cutting cycle. However, if we look at what the projections are moving forward, when we look forward, we can see that they are priced in. The Fed is going to continue to cut rates. They are not going to ease off the pedal. Something is already broken. We are in a recession or very, very close to it. Seasonality wise, we are now in the most bearish period of time for the year. The last 10 days of September are normally only up 39.58% of the time. And that's exactly where we are right now. But wait, there's more, because when we look at this stat right here, so the week before OPEX, we are normally only up. We've only been up 16 times out of 34 times. And that's going all the way back to 1974. If you also look, anytime we've had large moves, meaning 3% or more, they have all been to the downside. When we look at 1% moves or more, 7 of those moves have been to the upside, 21 have been to the downside. However, when we look at after OPEX, meaning for next week, as Friday is going to be OPEX, notice we have the same stat, up 16, down 34. But when we come over and look at 3% moves, 1 of them has been to the upside, 7 has been to the downside. Then we look at the 1% moves, 6 up, 25 down. So it does get a little bit better for the bulls on the 3% moves, but not so much on the 1% moves. And really the up or down for the week does not change when we look at that stat. We look at NVIDIA. NVIDIA looks like it may be producing another lower high. We have a high, lower high, another lower high, and then here we come for a potential another lower high. Now, if we break the swing point down here at 101.16, watch out, that could set a larger ABC pattern down, really bringing us down to about 90.63. Then as we come over, look at the dollar index, look at the hammer candle that was formed today. Now, we had a potential for a triple bottom pattern. We flushed lower, but we actually were able to come back up and close above it, which I'm kind of surprised about that. I really thought the dollar would actually trade a little bit lower. And we can see once the news came out at 2 p.m., big move down, and then ultimately came rocketing back up. Now, initially when the dollar came crashing lower, what was gold out there doing for the day? We look at gold spiked up, making another new all-time high. And look, we are not that far away from that little area we talked about where I said if you're looking to short gold, this would be a very viable target to the downside from about 25.70 down to about 25.61. And we're not that far away just yet. We look at the MACD indicator, it's still elevated at this moment as well. Then we jump over today and we take a look at crude oil. Crude oil basically giving us a little rejection right here at this structure breakdown point. And this is an area we were watching for quite some time. Now the question is, do we come down and produce a higher low? If so, that could set up an ABC pattern on the way down. So we want to see how crude oil actually acts over the next couple trading sessions. If we continue to go lower, we want to look and see, does a higher low get put in place? If so, then we're going to look for that ABC pattern to the upside. I want to make you guys aware Apex extended their 80% sale off all their valuation accounts, passing as little as 1 day. And what makes this even better is there's only an $85 activation fee across all accounts. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, as we come over real quick and take a look at the diamonds, look at that candle out there today. Not a very bullish looking candle. You can see we closed at the lower end of the range, but even more importantly, intraday, we are able to spike to a new all-time high. However, were we able to close above it? No. So we got to ask ourselves the question, is this simply a look above failure? And we've been talking about this as well. As we've been back up here towards all-time highs, look at the MACD indicator. Is it higher or is it lower than where it was during this peak over here? I think it's very obvious, showing us that the momentum to the upside is not nearly as strong as it once was. As we look out here on the 1 hour chart, MACD indicator does have a bearish cross. And now we actually have a little bit of a double top pattern. And let's go ahead and map this out real quick. We're going to go ahead and use the Fibonacci extension tool, and that would give us a price completion at about 410.73. And if you look, that would fill this gap and this secondary gap just below us as well. Now, down here on the 30-minute chart, notice the profile shape from today. I would classify this as a B as in boy, closing at the lower end of the range. If we break below value area low, then I'm going to want to look and turn my focus on the first gap being filled about 414.91. However, we got to pay attention. What are the news catalysts going to be that could potentially bring the Dow and the other indices lower? Well, for that, tomorrow morning at 8:30 a.m., we have the weekly unemployment claims. We have the Philly Fed manufacturing index. Then at 10 a.m., we have existing home sales. However, what might could even be more important than that would be the fact that the BOJ has their monetary policy statement. So we don't want to overlook that. And before we ever get our economic news in the US session, the Bank of England is also have their monetary policy rate. Now, why is that going to be important? Well, keep in mind, when the dollar index has large moves out there in the market, keep in mind that could also affect our indices like the S&P 500, the Nasdaq, the Dow, and and even the Russell 2000. Now, speaking of the Russell 2000, we had one heck of a rally on the way up, and it was only able to close with a gain of 4% on the session. Now, we closed near the lower end of the range, and now we have two back-to-back inverted hammers out here. We look at the location. We basically spiked above the swing high over here, which set up a look above failure. And now, are we about to go lower? If indeed that's going to be the case, that could set up a little double top pattern. Now, if we want to draw that out, if indeed this does come down, break the swing point right down here, we can see that gives us a price completion all the way down here at 183.37. Then as we look out here on the 30-minute charts, what do we see? Well, we see we have a B as in boy shaped profile. If we break below value area low, I want to look for this gap right down here at 217.70 to come back and get filled. However, if we break value area low and we start coming back up, I want to target value area high at about 222.32, and then maybe even a retest from the highs of today. And you might say, Mike, there's no way the market's going to come crashing down before the election. Now, when we come over and look at the QQQs real quick, you can see as we came up, boom, they smacked it right back down. The Qs today were down $2.05. However, after hours, we're up $1.39. Now, we're still looking for signs to see, is this going to be a lower high? Lower high, potentially another lower high. If that's going to be the case, that would set an ABC pattern on the way down, and that's coming in right near a key Fibonacci retracement level, the 78.6. As we dive down and we look at the 1 hour chart, notice we've had this upper level consolidation. Now we are threatening to break below the lower end of that range. However, I want to caution you guys on one thing real quick. The MACD indicator is getting very close towards the zero line. And if we stay at this upper level consolidation, that could be nothing more than a recharge point for another move higher in this market. Then when we dive down and look at the 30-minute chart, notice we've been stuck up here in this range for a little bit of time. And as we look at this, we got above yesterday's value area high. Boom, we came right back down. We auctioned all the way down to the bottom, and we actually were able to take out value area low. Now this morning, I warned you guys about this mines development area. Notice we came back and basically filled that in very, very good. MACD indicator on the 30-minute chart, basically neutral, hovering right near the zero line. And then as we come over and look at the 4-hour chart on the futures markets, notice we were able to spike above this upper level consolidation where a lot of people are saying, hey, can't this be a bull flag pattern? Which it can, but we need to get above this swing point over here, and we must stay above it. If we do get above that area, we're probably going to run the 20,117. But wait, what if we're actually going to have some bearish price action coming in? Well, I would want to turn my attention right down here at 19,410.25, which is an untested value area high from last week. The rule behind that is either this week or next week, we are likely going to come back and test that price point. Now, when we look out here on the daily chart, what do we see? Big inverted hammer on this candle right here. At a time where we see the MACD indicator, we have divergence, meaning MACD indicator was much higher in correlations with this peak over here. Then as we come up once again, the MACD indicator is not as high. What's that signaling to us is the fact that we have a lack of momentum in the market, which could also put pressure and cause stocks to go a little bit lower. Out here on the 4-hour chart, we can see the MACD indicator just trying to cross down, and there's that very bearish 4-hour candle closing at the lower end of the range where we were down $1.67. However, when we look at, if we look at after hours, we can see we're actually up $1.16. We dive down to the 30-minute chart real quick. MACD indicator basically flatlined, and for all intents and purposes, we really did a whole bunch of nothing. However, that last candle was quite bearish, and we're going to see, do we come back up towards the point of control tomorrow, or do we start flushing below value area low? If we do, don't forget, if we look left, we still have a gap down here at about 559.02 that still needs to come back and get filled. As we come over and look at the futures markets real quick, look at that big spike up we had on the S&P 500. And again, we're having a hard time holding above this volume area on the profile. We're able to spike it today. We just cannot hold above that price point. Keep in mind as well, we do have some high volume areas on the profile we want to target. Right down here about 56.58, then down here towards about 56.27. Keep in mind, we still have an untested value area high coming in about 55.91.75, which is going to be a high probability target that we actually come out there and hit that level this week. That we actually come back and hit that level either this week or next week. Now, we're kind of running out of time for this week, so it's probably going to be held off till next week or later. But I do want to caution you, anytime we close that far outside of value, it quite often will take more than 1 to 2 weeks to come back and visit that area. Now, as we look at the daily profiles, we had an 80-point range. We had a big spike up only to come back down. And we look at value area high, that's going to come in at about 57.11.00 with the point of control coming in at 56.99.50. Value area low coming at 56.81.50. So as long as we are above value area low right here, I'm going to look for the market to possibly retrace and retest the point of control. Then if we stay above that, I'm going to look for value area high to get retested. And then we'll see if we can push up higher from there. Maybe looking to retest these candle bodies either over here from the prior day or even the candle bodies that we had out here from today at about 57.27. However, if we start breaking back below value area low, then I want to zoom this out and say, all right, where are we likely to go? Well, we have a minus development area down here, which should act as a magnet, aka a target location. That comes in about 56.42 to about 56.39. So be well aware of that level. Have it marked off on your charts, and let's see, can we make it down there and hit that price point? Now, if you guys want to see what will get your payout denied from My Funded Futures, make sure to watch this video right here.